You see the finance cost. You need to look at the year that under subject. You know, the oil prices from January last year started rallying almost throughout the year, and our volume grew. And you can see we still reported a reduction of 4% in finance cost. So finance cost is still real item that we are dealing with it on a daily basis. Cash flow is everything, and any cash the business generates goes to repayment of debt. So volumes grew substantially in the tune of 46%. Oil prices almost double if you compare Jan to December almost on all products. So if you factor all in together, you'll understand that during the year, when I'm referring to that it was a record year, it was really, we generated a lot of cash. We took that cash and we deployed it to repay debt. And by that, we were able still to bring it down. I see more coming into the future, into 2018, in regards to finance costs. It's something we, as management and board, really keen to bring down. And I believe it will come down substantially because, as I keep saying over the years, you know, it's quite expensive to borrow in local currencies and in dollars in Africa.
Now, David, one other thing that we would like to touch base with, pretty much interesting, a point of interest, is that the exchange losses that we did see in last year, 2017, we did see 47 million Kenyan shillings in losses, exchange losses. How do you go about this? I mean, how do you caution this moving forward?
Yeah, it's a good question. We have a natural edge in the way we collect our inflows in Kenya mainly. It's to do with the local currency, which is the Kenya shilling, versus business lines like export, aviation, which is dollar denominated. So if you see the balance between the two currencies, it's quite even. This is the reason we are not much exposed. Last year we gained a bit. This year we lost a bit. We have full control of the exchange. You know, the currencies in the last year, most of the currencies depreciated. Now we see in Kenya, due to the end of the election, the prolonged election, and the good news that we are getting from the political scene between the two, contributes to the strength of the Kenya shilling. Kenya shilling is a strong currency generally, and we see more coming this year. So we are happy with the way all the measures we put on the natural edge between the collections that we are having in dollar and in the Kenya shilling.
Now, David, help us understand on the next point that has to do everything with operating activities. You have operating activities on ground, a couple of them, but then we've not seen these translating into money on paper. So where is the disparity in this?
Look, we had, there is in my commentary, there is a lot of reference to one-off items which impacted the results, and we were happy to deal with them for many reasons. The board sat and decided in early 2017 to take action on some of the skeletons we had in our cupboard. Most of them been booked under overheads and admin. Our admin cost, it came down by 8%, which is quite encouraging. I think a lot will come over 2018 in this area. We are dealing with the cost item. We restructured the business, and we keep referring to that in terms of human resource and the way we spend. So we are quite encouraged that actually the volume and performance hit a record, and actually we were able to contain expenses. And again, the one-off items are all issues that board decided to deal with them, and we don't see them, we dealt with them to finality. We don't see them coming back in the future.
All right, now, David, maybe this one is about my last questions, but obviously an interesting one. Now, we've seen a lot of Kenyans having questions about dividends and moving forward, but now we did see the interim dividend of 2017 already being paid. Now, what do we need to know about the final dividend?
Yeah, it's again all captured in my commentary. We added the additional 30 cents of a shilling. The dividend payout this year will be increased compared to 2016 by 33%. And 2017, for the full year, will be paying from the net profit of 2.4 billion. And if you wish, for our friends in Rwanda, and in other countries, it's like $24 million. Just to simplify it, we are paying 36% of the net profit back to the shareholders. We are doing it as a board happily. It was a great year. Our policy is to pay 30%. This year we went up to 36%. The cash generated over the year was quite massive, and we are happily sharing it with the shareholders. As you can see, dividend payout been on a rising, and I hope and I believe things will get improved over the coming years.